what is an operating segment? According to Malaysian Financial Reporting Standard 8 of paragraph 5, defines operating segment as a component of entity that engage in business activities from which it may earn revenue and incur expenses, whose operating results are regularly reviewed by the entity chief operating decision maker to make decisions about resources to be allocated to the segment and assess its performance, and for which discrete financial information is available. An operating segment may engage in business activity for which it has yet to earn revenue. For example, startup operation may be operating segment before earning revenue. By the way, did you know not every part of entity is necessarily an operating segment or even but an operating segment? For example, research and development department, unless they undertakes business activities such as tertiary function by the head office and earn interest.
COD is a function and not necessarily a person. That function is to allocate resources to and assess the performance of the operating segment. It is likely to vary from entity to entity. It may be the CEO, the chief operating officer, the senior management team, or the board of directors. The title or titles of the person identified as COD is not relevant, as long as it is the person responsible for making strategic decisions about the entity segment. For example, of COD in Nestle company in the board of directors are Tan Sri Wan, Zulkifli Wan Arifin, and Mr. Chin Kwai Fat.
Moving on, two types of segmental report in financial reporting is product and services segment as well as geographical segment. So, what is product and services segment? An entity shall report the revenue from external customer for each product and services or each group of similar product and services. Next, for geographical segment, an entity shall report revenue from external customer attributed to the entity's country of domicile and attributed to all foreign country in total from which the entity derive revenue, as well as non-current assets other than financial instrument, deferred tax assets, post-employment benefit assets, and right arising under insurance contracts located in the entity's country of domicile and located in all foreign country in total in which the entity holds assets. Nestle Berhad product and service segment include Nespresso, dairy product, and pet care. On the other hand, their geographical segment include Asia, North America, Europe, Latin America, and many more. How to identify profitable segment? When a specific product or service represents a significant and distinct business activities within the entity's operation, it should be presented as a separate operating segment in the financial report. For example, construction activities and development activities. However, not every operating segment needs to be shown separately. A segment only has to be reported if it meets the 10% rule. Also, if two or more segments are quite similar, they can be grouped together only if they meet certain conditions. So, how to identify a reportable segment? A reportable segment is one that meets any of the following quantitative 10% threshold, which are: first, revenue. Its reported revenue from sale to external customer and inter-segment sales is 10% or more of the combined revenue of all operating segments. Next, profits or result. The absolute amount of the segment reported profit or loss is 10% or more of the greater of the combined reported profit of all segments reporting profit or the combined loss of all segments reporting losses. And lastly, the segment assets are 10% or more of the total assets of all operating segments. If a segment does not meet the 10% threshold criteria, it can be designated as a reportable segment despite its size. It also can be combined with other similar segments that are also below the threshold of significance for the purpose of meeting the 10% test, or it can also be included as an all other segment category. Moving on, the 75% rule is used after determining the reportable segment. The entity should ensure that the total external revenue attributable to those reportable segments is at least 75% of the entity's total external revenue. If the 75% threshold not met, additional reportable segments should be identified even though they do not meet the 10% threshold until at least 75% of the entity's total external revenue is included in its reportable segments. As attached above is the Nestle Berhad geographical segment. It passed both 10% threshold test as well as 75% threshold test. How, you may ask? Above shown the revenue from different countries. Let's take an example of United States. Its revenue of $29,682,000 divided by its whole revenue, which is $32,123,000, and the result will be 19.40%, which passed both 10% threshold and 75% threshold, making it a reportable segment. Carrying on, as attached above is the Nestle Berhad product and service segment. Using the revenue test, let's take a look at food and beverage segment. Its revenue in the year 2024 is 4,823,533 ringgit Malaysia, divided by its whole revenue, which is 6,224,745 ringgit Malaysia. The result will be 77.24%. facing both 10% threshold and 75% threshold, making it valid to be a reportable segment. As you can see, the other segment included any segment that do not pass the 10% threshold as explained earlier.
The key benefit of segmented reporting for financial statement users, for the first point, is exchange transparency for decision making. Segmented reporting improves transparency by breaking down financial data by business segment. This allows stakeholders to clearly see where the revenue and profit are generated. For example, for Nestle Malaysia data, in the table for food and beverages, the revenue 4,823,533 and operating profit is 442,990. For the others, in revenue 1,401,212 and operating profit 162,169. The second point is informed investment and strategic decision. Segmented data support more accurate forecasting and risk assessment. Investor analyze and the management can make better decision on where to allocate resource, expand or manage risk. For example, for Nestle Malaysia, food and beverages revenue on 2024 is 4,823,533. Other segment on 2024 is 1,401,212.
Bursa Malaysia require all entities whose debts or equity security are publicly traded to publish interim financial report. These reports are important because they help provide timely updates on a company's financial performance between reporting periods. Now let's talk about MFRS 134, interim financial reporting. This standard deals with financial report that cover a period shorter than a full financial year. For example, half-yearly, quarterly, or even bi-monthly report. An interim financial report can be either a complete set of financial statements or a condensed version depending on what's appropriate and required. MFRS 134 set out the minimum content that must be included in this report. It also outlined the disclosure requirement and it specified the recognition and measurement principle that should be followed, meaning how and when items are recorded and reported. Overall, MFRS 134 ensures consistency, transparency, and comparability in interim financial reporting, making it easier for investors, regulators, and the public to access a company's financial health throughout the year. Now, let me walk you through my part, which focus on two significant events and transactions that affect an entity's financial position and performance since the last annual reporting period. These are areas where management has to make important judgment calls because they are significantly affect how items are reported in the financial statement. Let's start with the first point, which is determining the lease term of contract with the renewal or termination option. This means figuring out how long the company expects to use the lease asset, not just a minimum lease period, but whether they are likely to renew or terminate early. Nestle evaluates different factors here, for example, like whether it is economically beneficial to continue or to end the lease. So it's not just math, it is strategy. Next, the second point is impairment of PPE, property, plant, and equipment. This one about physical assets, like machinery, buildings, and equipment. At each reporting date, Nestle check if these assets are still worth their listed value. What interesting, they also consider their environment goals, like switching to recycled packaging or reducing emission. If this impact how an asset is used, it might lead to impairment. In fact, an impairment loss of 36.5 million ringgit was recorded this year. So, to sum up, these estimates and judgments goes beyond number. They reflect management understanding of the business, its future direction, and how committed they are to transparent reporting. Thank you. Now, I will pass it to Atika.
Thank you, Azrina. Now, let's take a look at the types of interim reports. A financial year is divided into 4 quarters. The first quarter runs from 1st January to 31st March. The second quarter from 1st April to 30 June. The third quarter from 1st July to 30 September. And the fourth quarter from 1st October to 31st December. For the overview of current and comparative interim financial statements, this table highlights the reporting period for different components under the interim financial reporting framework. For the statement of financial position, which is SOFP, the current period covers 1st January to 30 June 2024, while the comparative period refers to the full year of 2023. For the statement of profit or loss and other comprehensive income, which is OCI, we have two types, which are the interim, which is covering just the second quarter, and the cumulative, which is covering the full 6-month period. Both of these are compared against the same period from the previous year. The statement of changes in equity, which is SOCI, and the statement of cash flow, which is SOCF, also follow the 6-month timeline from 1st January to 30 June for both current and comparative period. This format ensures consistency, transparency, and comparability in financial performance and position across period. Now, let's take a look for example of statement of financial position of Nestle company. This is the example of statement of profit or loss of Nestle company. This is example of statement of changes in equity of Nestle of company. This is example of statement of cash flow of Nestle company. That's all from us. Thank you.